Welcome back to 𝗙𝗘𝗘𝗘. Now, some of you might already recognize this indicator. Yeah, you're absolutely right. This is the legendary EMA Rainbow indicator, and today I'm going to show you exactly why this indicator earned that legendary status and why it's still one of the most powerful high accuracy trading tools ever used. This is not hype, this is not nostalgia, this is precision trading at its finest. Let's start right here on this chart. Look at this price action. Now let me ask you a simple question. Where is the entry? The answer is right here. This strong bullish candle, this one, is the buy entry signal. Now pause for a second. What about this bullish candle? What about this bullish engulfing candle? What about this last bullish candle right here? The answer is none of them. Not a single one of those candles qualifies as a valid buy entry in the legendary EMA Rainbow strategy. And this is where most traders mess up. They get emotional, they rush, they jump in too early. Now let's shift slightly to the right here. New question, where is the sell entry? Is it here or maybe here? The correct answer is right here. And this is the core concept you must understand about the EMA Rainbow strategy. This system is built for high probability entries only, not random entries, not emotional entries, and absolutely not premature entries. This strategy doesn't care how many signals appear, it only cares about signals that are stacked in your favour, signals that are very close to a guaranteed win. That's why in this video, I'm going to show you, once again, just how insanely powerful the signals produced legendary EMA Rainbow strategy really are. I'm talking about clean entries, razor sharp accuracy, and massive profit potential with minimal risk. This is not random trading. This is not guessing. This is the kind of system that when executed properly can seriously change your trajectory as a trader in a very short amount of time. And that means something important. It means you're no longer stuck in a tiny boat fighting against the waves of a market with almost unlimited power, a market that can swallow careless traders whole. Instead, you're stepping onto something much bigger, much stronger. So now let's break this strategy down from the very beginning. Starting with the foundation of it all, the rainbow moving averages. All right, this is the EMA Rainbow in full view. Look at this. Just look at it. Visually, this indicator makes price movement stupidly clear. I mean, even without candlesticks on the screen, you can instantly tell what's going on. Right here, you don't need to guess, you don't need to zoom in, you can see it. The market is in a strong, aggressive, bullish condition. It's obvious, it's screaming at you. Now jump to this chart. Same thing, but watch this closely. With just the EMA Rainbow, you can immediately identify both the market trend and the strength of that trend. No candles, no noise, no confusion, and even without a single candlestick showing, you can clearly see it. The market is in a bearish trend. Clean, clear, undeniable. So the big question is, what do you need to do to find entry signals with high accuracy? Don't worry, relax, because I'm about to show you exactly that right after this. Here's the core of it. This strategy is designed to hunt for entry signals that are almost guaranteed to win, not random entries, not emotional clicks. With this strategy, we aggressively eliminate as many entry mistakes as possible. We close the gaps, we filter the noise, we only focus on the signals that actually matter. All right, enough talking. Let's get into it. Let's start right now. All right, now we go straight in. Right now we're tearing this special strategy apart piece by piece. No fluff, no delay, let's go. In this strategy, there are two approaches. Number one, EMA Rainbow trend signal entry. Number two, EMA Rainbow pullback entry. And right now, laser focus, we start with the first one, EMA Rainbow trend signal entry. Now watch the chart. Look right here. In this EMA Rainbow trend signal entry strategy, I only take entries when the trend is already clearly formed and has serious trend strength. Not weak, not shaky, I'm talking strong, undeniable momentum. So how do we know if the trend is clear and powerful? Simple, I analyse the formation of the EMA Rainbow itself. That's it, no guessing, no emotion. Now remember this chart, at the beginning of the video I told you this candle right here, this one, is a valid buy entry signal. But these bullish candles? This bullish engulfing candle and this last bullish candle, none of them are valid entries in this strategy. So the question is why? Why is this a valid buy entry while the others are not? Here's the reason. Listen closely, because the market is truly in a bullish trend and it has very strong trending power. And how do we see that? through a perfect EMA rainbow formation. The EMA lines are cleanly stacked, neatly aligned, all pointing up with zero overlap, no mess, no chaos, just order, just power, and it gets better. The market's trend strength is confirmed by the steep angle. We're talking 45 degrees or more. That angle tells you one thing loud and clear: the market wants to go up. This is strong bullish behavior. So when you see an EMA rainbow formation like this, boom, you are officially in combat mode. You must be ready, you must be alert, you must prepare for a buy entry the moment a valid signal appears. And make no mistake, this is the kind of entry that is almost guaranteed to win. Now the next big question, how does a valid entry signal actually form? Here's the answer. The market must first enter a deep enough correction phase, and in this strategy, a deep correction means price moves into the blue zone or even deeper into the green zone. After price enters the blue area or the green area, it then moves back up, breaking above the orange line, continuing the bullish trend. And here's the key moment, pay attention. When price moves up, breaks above the orange line, and the candle closes above the orange line, that is a valid buy entry signal. High probability, high quality, no debate. At that point, you must immediately enter a buy on the open the next candle. And don't forget, risk control matters. And place your stop loss below the nearest swing low or below the blue line or below the green line. You choose. Adjust it based on the risk you can handle. Small stop loss, price room is tighter, but your risk reward ratio explodes. Bigger stop loss, more breathing room, but the risk reward ratio gets smaller. Your call, your risk, your control. Now, I believe from this explanation you already get it. But before we move on to strategy number 2, EMA Rainbow pullback entry, I'm going to give you another example. Why? Because this strategy is insanely powerful. And it would be a tragedy, an absolute tragedy, if you didn't master it properly. All right, now we slide the chart just a little bit to the right here. Look at this. Now the question hits hard. Where is the sell entry signal? Is it here? Or maybe here? The correct answer is right here. And listen carefully. The process is exactly the same as the buy entry analysis I explained earlier. Same logic, same discipline, same structure. Now, why is this a valid sell entry signal? Here's the reason, and this is critical. Because the market is clearly in a bearish trend and it has insanely strong downside momentum. No hesitation, no confusion. How do we know that? From a perfect EMA rainbow formation. The EMA lines are cleanly stacked, perfectly aligned, all pointing down with zero overlap. Everything is orderly. Everything screams control by the bears. And it gets even stronger. The bearish strength is confirmed by the steep downward angle. We're talking 45 degrees or more. That angle tells you one thing loud and clear. The market wants to go down. This is strong bearish behavior. So when you see an EMA rainbow formation like this, boom, you are officially in combat mode again. You must be ready. You must stay sharp. You must prepare to execute a sell entry the moment a valid signal appears. And just like I said earlier, this is the kind of entry that is almost guaranteed to win. Now, the next big question. How does a valid sell entry signal actually form? Here's the answer. In a strong bearish market, price must first pull back upward, and it has to be deep enough. In this strategy, a deep pullback means price moves into the blue zone or even higher into the green zone. After price enters the blue area or the green area, it then reverses, breaking back down below the orange line, continuing the bearish trend. And this is the critical moment. Lock in. When price moves up, then breaks down below the orange line and the candle closes below the orange line, that is a valid sell entry signal. High probability, clean execution, no guessing. At that point, you must immediately execute a sell on the open of the next candle, and risk management non-negotiable. Place your stop loss above the nearest swing high or above the blue line or above the green line. Your choice, your risk tolerance. Let me say it again so it's burned into your brain. Small stop loss, tighter price movement, but your risk reward ratio goes crazy big. Bigger stop loss, more room for price, but your risk reward ratio gets smaller. Choose wisely. And the result, you can see it yourself. Price drops fast, aggressively, continuing the bearish trend that was already extremely strong. This is not luck. This is not guessing. This is precision execution inside a powerful trend. All right, now this is where most traders get trapped, so lock in. Why is there no entry signal in this phase? Why am I doing absolutely nothing here? The answer is actually very simple, but this is a firm answer, non-negotiable, no debate. Because the market is not truly in a bullish trend and it does not have strong trending power, period. How do we know that? Look at the EMA Rainbow formation. The EMA lines are overlapping, crashing into each other, tangled, messy. That alone already screams no control, no dominance, no edge. And even if a trend starts to look like it's forming, it still doesn't have enough power. Why? Because the angle of the EMA Rainbow is still shallow, below 45 degrees. That tells us the market is still hesitating. This means one thing: the market is not convinced to go up yet. A strong bullish trend has not officially begun. Now, look at the right side. Why is this price movement not classified as a valid entry signal either? Again, the answer is simple, direct and non-negotiable. Yes, the candles are sloping downward. Yes, the move looks sharp. But the EMA Rainbow is still overlapping, and that means the bearish trend is not valid yet. So what does that mean for me? It means I am not allowed to take a sell entry here, even if a signal looks tempting, even if someone else trades it. Even if you take this trade and somehow make money, I don't care, because I am disciplined to the rules of the EMA Rainbow strategy. Remember this. Burn it into your brain. The EMA Rainbow trend signal entry strategy only hunts for higher accuracy entries, entries that are almost guaranteed to win. There is no compromise. Every single entry must obey the rules I explained earlier, no exceptions. All right, now I'm about to show you the second weapon in this system. Lock in. Eyes on the chart. This is trading strategy number 2, EMA Rainbow pullback entry. And listen carefully. This strategy also has insanely high accuracy, but the way we analyze the market here is completely different from the first strategy, the EMA Rainbow trend signal entry. So don't mix them up. Now look at this chart. Let's break it down together, step by step. In this strategy, we still use the EMA Rainbow, but we also focus heavily on 2 specific EMAs, the 14-period EMA and the 5-period EMA. So the big question is, how does this strategy actually find its entry signal? I'll answer that using this exact chart. Step 1. The 5-period EMA must move below the 14-period EMA, and not just barely. There must be clear space between them. No squeezing, no hugging, no overlapping. That wide separation tells us something critical. In the short term, the market is strongly bearish. Step 2. This formation, the 5 EMA below the 14 EMA with wide spacing, must then cut downward through the EMA Rainbow from top to bottom. When step 1 and step 2 happen together, that's your early morning. That's when I say, okay, pay attention, something big is forming, because this exact structure is the early setup for a high probability sell entry that is almost guaranteed to win. Now, step 3, we wait. And we wait for the correction phase. During this phase, the 5-period EMA must cross back up above the 14-period EMA, just like you see right here. And this is critical. If the 5 EMA fails to cross above the 14 EMA, then the correction is invalid. No debate. No trade. Heard. Now, step 4. After that collection, we wait for price to roll over again. Price moves down, and the 5-period EMA crosses back down below the 14-period EMA. Boom! That right there is your valid sell entry. High probability, clean, precise. And listen carefully, this is a single entry strategy. If steps 3 and 4 repeat again, I do not use this strategy anymore. At that point, I switch back to strategy number 1, EMA Rainbow trend signal entry. Just like before, once I enter, I immediately place my stop loss. In this strategy, the stop loss goes at the nearest swing high or above the highest green EMA line. And as you can see with your own eyes, right after the sell entry, price drops fast, continuing the bearish move. This is a brutally powerful strategy, easy to understand, easy to execute, and incredibly easy to apply with discipline. Alright, now we're breaking down the buy entry signal. Lock in, eyes on this chart, don't blink. Look at this price action right here. We're going to walk through the analysis step by step, exactly in order. Step 1. The 5-period EMA must move above the 14-period EMA, and this part is non-negotiable. There has to be clear space between them. No squeezing, no touching, no overlap. That wide separation is the clue. It tells us that short-term momentum is strongly bullish. Buyers are stepping in with force. Step 2. This same formation, the 5 EMA above the 14 EMA with wide spacing, must then break up through the EMA rainbow from the bottom to the top. When step 1 and step 2 happen together, this is your early alert. This is the moment where I stop chilling and start watching the market like a hawk, because what you're seeing here is the early construction of a high probability buy setup that is almost guaranteed to win. Now, step 3, we wait. We wait for the trend correction phase. During this correction, the 5-period EMA must cross down below the 14-period EMA, just like you see right here. And listen carefully, if the 5 EMA fails to cross below the 14 EMA, then the correction is invalid. No excuses. No trade. Now, step 4, after that correction finishes, we wait for the trigger. Price starts moving up again. And the 5-period EMA crosses back up above the 14-period EMA. That right there is the buy signal. Clean, clear, high probability. This is the moment you pull the trigger. And remember, this is a single entry strategy. If steps 3 and 4 repeat again, I do not use this strategy anymore. I immediately switch back to strategy number 1, EMA Rainbow trend signal entry. Just like before, once I enter, I immediately place my stop loss. In this strategy, the stop loss goes at the nearest swing low or below the lowest green EMA line. And as you can clearly see with your own eyes, right after the buy entry, price launches upward, continuing the bullish move. After these 2 examples, I know you can feel it. This strategy is powerful, it's easy to understand, and once you master the rules, it's incredibly easy to execute with discipline. This is how precision trading is done. Alright, those are the 𝗙𝗏 Rainbow strategies you absolutely need to master if you want real weapons to fight the market. And honestly, both of these strategies are extremely easy to understand and, even more important, easy to execute with discipline. But now, let me show you something even simpler. If you want maximum clarity, you can replace regular candlesticks with Heiken Ashi candles, just like I'm showing you on this chart right here. So, if you're a Heiken Ashi fan, this instantly becomes an extra weapon in your trading arsenal. Now, the big question, do the rules change when we switch to Heiken Ashi? The answer is simple and crystal clear, no. We use the exact same trading rules as in strategy number 1, EMA Rainbow trend signal entry. Nothing changes, zero confusion. Let me show you. On this chart right here, the market is clearly in a bearish trend, and not just bearish. Strong bearish. How do we know? Because the EMA Rainbow is perfect. Every EMA line is neatly stacked, pointing straight down, no overlap, no mess, no debate. And on top of that, the bearish strength is undeniable. The EMA slope is steep, around 45 degrees or more. This tells us one thing loud and clear: the market is fully committed to going down, strong, aggressive, bearish. So the moment you see an EMA Rainbow formation like this, you're officially in combat mode. You are ready to hunt for sell entries. And like I said before, this kind of setup produces entry signals that are almost guaranteed to win. Now let's answer the next question. How does a valid sell signal form when using Heiken Ashi? Here's the rule. In a strong bearish market, price must first pull back upward far enough. And because we're using Heiken Ashi, that pullback is shown when lime-coloured Heiken Ashi candles enter the blue zone or even deeper into the green zone. Then, this is the key moment. After entering the blue or green zone, the Heiken Ashi candle changes colour back to red. That colour change is your confirmation. That's the signal saying the market is ready to continue the bearish trend. And the moment that happens, you immediately enter a sell at the opening of the next candle. No hesitation. And just like always, you place your stop loss immediately. Your stop loss goes above the nearest swing high, or above the blue line, or above the green line. You choose based on the risk you're comfortable with. Remember this, small stop loss means tighter price movement, but bigger potential risk reward. Bigger stop loss gives price more room, but the risk reward gets smaller. Your choice, your risk profile. And the result? Just look at it. Price drops fast, continuing the bearish trend that was already incredibly strong. And as you can see on this chart, you can take another sell entry right here and another one right here. Still simple, still clean, still extremely accurate. That's the power of EMA Rainbow, even when combined with Heiken Ashi. All right, now we move one level deeper. This is where things get advanced, sharp, and seriously powerful. By using 3 approaches built on the same indicator, you suddenly start seeing the market way more clearly, way more technically, and your entries become far more precise. This is the moment where confusion disappears. You can actually build this trading system yourself because the logic is clean, structured, and incredibly easy to assemble. But if you want the exact same setup you're seeing in this video, don't worry, I've got you covered. You can download the indicator and the full trading system directly from the description box below. I've included a ready-to-use template that you can add straight into your trading chart. Once you load it, boom, all indicators are plotted automatically and accurately. No guessing, no manual setup, no wasted time. Just load it and focus on executing like a sniper. The download link is waiting for you in the description, and I genuinely hope this helps you level up your trading game fast. And as always, if you learn something new today, if this opened your eyes, or if you want more videos like this more often, make sure you subscribe, hit that notification bell, and share this video with your friends on WhatsApp, Facebook, or X to show your support. I'll see you in the next one. Let's keep winning.